Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, October 30th. A quick note, I'm recording this video a couple days early as I'm about to hop on a plane back to Asia to check out what's happening there. Also, I want you to stay tuned. I have a question for my colleague on some markets I'm going to show you today. So let's get right to gold, where there's considerable action. Gold has now breached the $1,300 level, and as you can see on the chart I have for you, it's looking very solid for a continued uptrend move. That's not to say we won't have any pullbacks. We will. But as you can tell from this chart, gold has broken through key critical resistance and is holding very firm. I would not be surprised to see the 1320, 1330 level next, followed by the 1380 level. What's driving it is what I've been telling you all along: diminishing confidence in government and diminishing confidence in our paper monetary system. Let's now also take a look at the Dow. Last week I told you the Dow would probably make a vault towards the 11,000 level. Indeed, that is what's happening. We've gotten as high as about 10,850. I would not be surprised to see the Dow get to 11 or even 11,100 before the next turn down occurs, which will occur shortly. So I do not recommend loading up on stocks here. That's been my policy for the last month or so, and the risk is to the downside, with the exception of key natural resource stocks that I recommend. Now I want to take a look at two very important markets that have really taken off to the upside. The first one is corn. Let me get that chart up for you here. Corn, let's take a look at, here's corn. Corn has also, like gold, broken out to the upside, as you can see here on this chart here. It's had quite a move since early July, rising from about the $3.80 per bushel level to $5.28 or so as a recent high. Like gold, it's showing a lot of upward momentum with very little overhead resistance. So that's a market I'm looking at very closely right now. Another market is sugar. Sugar is taking off like a bat out of hell, so to speak. We've seen sugar go from 15 cents in early June to 26 cents, almost doubling, when you more than doubling, almost doubling in a very short period of time. And you have to wonder what's driving sugar, and for that matter corn, so much higher. Well, I have some insight into that. And in addition to the large demand that we're seeing from China, and of course the monetization effect that's affecting all commodities, I have a question for my colleague Rudy, who can provide us some additional insight on what he's seeing in corn and sugar from the perspective of Latin America, his specialty. Rudy, what is driving commodities such as corn and sugar so much higher in such short periods of time?
Thanks, Larry. There are two reasons for the recent rally: supply and demand. Now let's look at corn. New corn supply is limited. The United States is the largest producer and exporter of corn, but the problem is not the United States. The issue is with other large corn exporters, Brazil and Argentina. For Latin America, this is the year of the global weather phenomenon La Niña, which is characterized by the cooling of ocean surface temperatures off the coast of Peru. This tends to delay and reduce rainfall over Brazil's grain belt, especially the two large southern grain states that are prone to droughts. Now, the current drought in Brazil, the world's biggest producer of coffee, sugar, and oranges, is harming crops and drying the Amazon River to its lowest point in 47 years. So what happens in Latin America in this upcoming harvest will affect the price of your morning cornflakes, coffee, even your orange juice. The second point I'm trying to make here is demand for corn continues to creep upward slowly. I mentioned that the U.S. is the largest producer. Well, China is the second largest producer of corn, and it's their largest grain crop. But with the recent floods in China and the appreciating value of their currency, it's cheaper for them to import corn, especially for their feed. Every corn trader in the world is salivating at the prospect of China becoming a larger importer, just like Japan, which brings in over 16 million tons of corn a year. Chinese officials are currently stressing how small the amount they're bringing in is relative to their total harvest. But for the rest of the world, the truth is, Larry, this is about the entry of a new long-term buyer into the global corn market. Now, this could have serious consequences for food prices and crowd out other users. Already exporters, livestock feeders, and ethanol makers are going through the U.S. corn stockpile faster than farmers can grow it. Now, the USDA has estimated 4.7 billion bushels of corn this year. 1 out of every 3 produced this year will go towards ethanol. That's a huge amount being demanded there. Last I heard, Larry, they were not creating new farmland in the United States. So the keys to meeting this demand will be higher yields per acre in the U.S. and new approaches to bringing more ethanol to market. And the Latin Americans, too, are looking for ways to put more acres to work and increase yields. But it looks like their ability to make a difference on the supply side will have to wait until next year. This weather situation has impacts on other crops as well, especially sugar, which has been experiencing a reduction in supply in India for some time now. As you mentioned, Larry, this commodity went from 15 cents in June to 26 cents now and still has upward fundamental pressure. Sugarcane is being used to produce ethanol, especially in Brazil, which has a strong local market for ethanol for its flex fuel fleet vehicles. As the price of ethanol increases, more sugar goes into the fuel market. My point is, higher sugar prices will be a long-term reality as demand for ethanol grows. Now, I know this sounds really negative, but there's an upside here. Those commodity prices that we're talking about here also have benefits for the suppliers, the agricultural suppliers. So if you want higher yields, you'll need more fertilizer, better seeds, and more efficient farming methods and processes. So over the last few days, I've been watching the price of fertilizer companies go through the roof, especially after BHP Billiton announced an interest in potash. Now, where do we go from here? What do we invest in? I think that the corn ETF, CORN, and sugar ETF, SGG, are a good starting point for the average investor. Like all ETFs, they had the advantages of liquidity, real-time pricing, and ease of use. They also make available a variety of strategies that an average investor would have trouble keeping up with. So for instance, the corn ETF owns positions in 3 different corn futures on the Chicago Board of Trade. And if you bought the sugar SGG ETF before the 4th of July, it would have been up 62% today. So there's a lot of value in here. Now, these markets represent examples of Wall Street waking up about global food supplies. Now, on the equity side, there are also some quick picks I want to mention. SQM is a Chilean fertilizer company that I like. ADM, Archer Daniels Midland, is an attractive company, especially in the ethanol. Bunge has about 30% of its business coming from Brazil. That's an attractive play. AGCO is, as some of you know, Massey Ferguson, and about 25% of its business comes from Latin America. And the contrarian pick of the week is Monsanto, ticker symbol MON. That one has a nice yield to it. Larry, thanks for watching. Happy trading.